Semiconductors just pulled back roughly 10% in 2 weeks. Is this a healthy correction in an uptrend, or a bigger shift in the trend? NVDA, Micron, AMD, the entire sector is pulling back together. Today we do a full volume price technical breakdown to map out the key levels and what to watch next. Structure Preview, Episode 7, Semiconductor Sector Deep Dive. 5 dimensions, 1 complete framework. Let's dive in. Start with the weekly chart for context. From last year's lows to recent highs, the SOX index rallied over 100%. This pullback is the first real test of the uptrend all year. The 20-week and 50-week moving averages are both still pointing higher. Price remains above the 20-week line. On the weekly timestamp, the long-term uptrend structure has not broken. The primary uptrend line sits about 15% below current prices. We would need a much deeper move before the structural trend breaks. Weekly RSI is cooling off from overbought levels. This looks like a normal reset after a huge run, not a panic sell-off signal. Volume on this pullback is higher than previous dips this year. That tells us participation is elevated and disagreement is growing at these levels. Worth paying attention to. Weekly takeaway. The bigger uptrend structure is still there, but this pullback carries more selling volume than prior ones. It's the first real test of the AI rally all year. Now zoom into the daily chart, where the near-term action is. We'll map out the key support and resistance levels to watch. The 20-day moving average has already broken. The 50-day moving average is the next major support test. That's where buyers have stepped in consistently all year. Key support levels from top to bottom. First, the 50-day moving average. Second, the prior breakout zone. Third, the 38.2% Fibonacci retracement. Fourth, the 50% Fibonacci retraction across the full swing from low to high. The 38.2% level is the first major Fib support. That's typically where the first bounce shows up in a strong uptrend. On the resistance side, reclaiming the 20-day would be the first sign of strength. The recent breakdown zone is the next hurdle, and all-time highs are the major level to clear. Bollinger analysis. Bollinger bands are expanding, which means volatility is spiking. We hit the middle band and kept going. If we reach the lower band, that's typically where dip buying interest shows up. Daily takeaway. The 50-day moving average is the next big test. Short-term momentum is bearish, but the larger support levels haven't broken yet. Now the most important part, volume. The last 3 down days have all printed above an average volume. When price drops on rising volume, it tells you sell-side perturbation is elevated. Here's the key comparison. On the way up, volume expanded as price rose. On the way down, volume is also expanding. When both up and down volume are high, it means the market is disagreeing more strongly at these levels. A healthy pullback in an uptrend usually comes with shrinking volume as price drops. That means selling pressure is running out of steam, and the uptrend is more likely to continue. Caution signal pattern. The signal to watch more carefully is when volume expands as price drops. It means more sellers are stepping in and trend momentum is weakening. It's not a guaranteed top, but it raises the risk profile of the pullback. Right now, we're seeing elevated selling volume, but not yet climatic panic volume. The next few sessions are critical. If volume shrinks as we approach the 50-day, that's constructive. If volume keeps expanding, a deeper move becomes more likely. Volume takeaway. This is not a clean, low-volume pullback. There's real two-way activity happening up here. The real test comes at the 50-day average. That's where we see if buyers step back in. Now, check the leading stocks. When all the big names in a sector pull back together, it tells you this is a sector-wide move, not just one company's individual issue. NVDA is holding up the best. It's still well above its 50-day average, and the pullback is shallower than the rest of the group. Relative strength here is a constructive sign for the sector. Micron is pulling back harder. It was one of the biggest winners in the first half, so profit-taking makes sense. It's already testing its 20-day average, with elevated volume on the way down. AMD sits somewhere in the middle, not as strong as NVDA, not as extended as Micron. It's mostly just moving with the broader sector.
The key read here, the sector leader is still the strongest performer on the way down. When the actual leader of a rally maintains relative strength through a pullback, it usually means the uptrend isn't over yet.
What would shift the outlook more bearish? If NVDA breaks its 50-day moving average on heavy volume and all 3 leaders break support in sync, that would be a much stronger trend change signal. Leader takeaway. The top name is still holding up relatively well. That's constructive. The real warning bell rings when the leader itself breaks down on volume. So how do you approach it? 2 different frameworks, 2 different risk profiles. Pick the one that matches your style and rules. Approach 1. Scale in at support. Start with a smaller position near the 50-day average. Add more at the 38.2 FANG if price reaches it. Plan your stop below the 50% fib level. For experienced traders who manage strictly. Educational example only. Approach 2. Wait for the reclaim. Let price get back above the 20-day moving average with improving volume, then consider participation. You missed the exact bottom, but you get a higher condition set. Important note, no setup is guaranteed. This is a volatile sector at a major decision point. Size positions accordingly, and always plan your exit. This is an educational example, not investment advice. Let's wrap it up. Weekly uptrend structure intact, first real test all year. Daily 50-day average is the line in the sand. Volume elevated two-way activity, not a clean pullback yet. Leaders, NVDA still showing relative strength. Remember, wolves don't guess tops and they don't rush into entries. They wait for confirmation. They let the market show its hand first, then act. Next episode, we cover the 5 classic candlestick patterns every trader needs to know. Retracement signals, continuation signals, and how to read them with real examples. Quick question. Where do you think this pullback finds support? Drop your read in the comments below. If you found this sector down useful, hit like and subscribe. I'm Trade Wolf. Stay patient, stay disciplined. See you in the next one.